This is Pavlyukovskyy, and welcome to the TechMates podcast, where my partner Hendrik and I explore how Kiwi and Aussie founders are reshaping the future and what sets them apart. Hendrik and I have been part of successful companies in Silicon Valley and Europe, and now bring that expertise to partner with entrepreneurs in Australasia. By sharing the personal stories of successful Kiwi and Aussie founders and how they got here, we hope to inspire you to dream big. This is TechMates, bringing an outsider's perspective to the stories of those daring to disrupt down under. Let's dive in.
So I've been really excited about it because when I started kind of looking into this market here, I didn't realize how much of a fintech scene there actually is. And it's been quite excited to see all these great companies. And also I've been able to invest in a few of these companies. And we have three really great fintech founders here, all doing something a little bit different. But yeah, maybe we can get started with you, Jovan. Want to quickly introduce yourself and talk about Emerge?
Yeah, I'll just give it a quick sort of 45 minutes. Jovan, we started with SquareOne, which is now arguably encroaching on becoming the incumbent for youth banking in New Zealand for kids' first accounts. We've had that in market. SquareOne turns 4 actually a few weeks. And so SquareOne you can think of as your kids' first account. It's kind of it's not the destination, it's the launch pad, or it's the on-ramp to the world of money for kids' first accounts. We've onboarded a couple 100,000 customers through that. The bigger vision was always, though, could you build a bank? Not just could you make the world's best public money? And so Emerge is now that bigger vision coming to life. Emerge is the parent company. We started with business accounts because we could see that was the next biggest and most underserved vertical. And I guess that's part of our play, is finding those areas where the big banks either aren't playing or are underserving customers horrifically. So I started with kids accounts, and then with Emerge, we launched with business accounts first. Had that in market for 18 months now. And just last week, we actually launched Emerge Personal. So you can think of it as we kind of started with a bit of a barbell with kids accounts at one end and business accounts at the other. And now we've got the bridge between the two with personal accounts launched literally, like now. So you're able to sign up for personal accounts and kind of fund if your typing's any good. Whistle through KYC, get up and running. So that's all good enough.
How long would it take me to open a PNZ account?
So
I was never able to.
So it can be, look, it depends on your level of the complexity of where you come from and what you're trying to do. But, the big reason for launching Emerge with business accounts is there was so many stories there about it taking like 6 and 7 months to even open a business bank account. So, I could walk into a branch and say, hey, I've been a customer for 35 years. You've got my mortgage, my credit cards, you've got all of our personal finances, you know everything about me. And hey, I've started a business. Who cares? Come back on the 39th of November. We'll need you to fill in some paper forms, lunch visits, we'll have to have appointments. You might need to bring your accountant in to give us a Dragon's Den style pitch about why we should grant you this magical access to this important thing for a business bank account that only we can have. And then we might think about giving to you if you really jump through. So 6 and 7 months plus, can be. So we got that down to like 6 or 7 minutes.
Yeah, and I should take that back. PNZ has been very good to us. But thank you. Dermot, you go next.
I'm Dermot. I'm founder of Wych. We are the infrastructure for payments and data. We are, in a way, the plug-in socket of the data infrastructure and payments infrastructure. We operate on the bank side, which is the socket. We enable them to share that information or enable payments. And on the other side, we provide the plug so that people can plug in and consume that information or to trigger those payments. And so we work with the banks in that sense, enabling them to do that sharing. Whether that is your personal accounts, business accounts. We do the read and write aspects of it so that you can update that information if that needs to be pushed in, and enables them to jump to modern technology on their really legacy systems. And so they can essentially, you can meet them even at their 7th, because I think it took us about 6 months to get to open our first business account. So being able to deliver those pieces in a modern.
Hey everyone, I'm Steve, founder of Extraordinary, and we've built a benefits platform that uses cards as one of the parts of the distribution mechanism. So as many of you may know, businesses do lots of different things for their employees, reward and recognition, corporate gifting, balances in all of their different forms. And with Extraordinary, you bring that all into one platform. Organizations can distribute funds to their employees in controlled ways, and then their employees can go and spend those monies with a controllable payment card and a benefits bank account aligned to how their employer wants to distribute them. We've got like 34,000 active cards currently and signed 48,000 active potential cardholders that will be onboarding between now and the end of this year. Our largest customer will be in New Zealand now. We've got a couple of the banks, ASB, BNZ, across WC, the Financial Markets Authority, currently working across New Zealand and Australia, looking to hopefully enter into other markets. Lots of water to flow under the bridge before we start to expand further. And another thing we've recently done is we made public transport in New Zealand tax-free. So it's the only way that employees in New Zealand can access their pre-tax income to fund their public transport costs, saves the average Kiwi like $900 a year.
And I've been stuck in traffic this morning, so I think public transport is definitely needed here. I want to talk a little bit about, I guess money is a very regulated industry, right? And, there's obviously like huge risks, and that's why there's regulation. And fintech companies are often either like, working because of a change in regulation or kind of benefiting from a change in regulation. And sometimes they work actively against it, find a way to work around them. How do you see kind of the regulatory environment here in New Zealand? Are you more, I guess the answer will be different for each of you, but are you more kind of benefited from the regulatory environment, or is it something you have to kind of work against? Maybe don't, but I'm starting.
Yeah, well, there's two sides to what we do. So the regulator is our biggest friend on one side. That's enforcing the banks to participate in these years. And so the idea there is by having clear dates, clear mandates on what they have to share and what they have to do, the timelines for what to do that in, means that the banks understand their timelines very clearly and they can commit resources to actually achieving those pieces. If anybody's seen the New Zealand open banking ecosystem for the last 7 years, you'll know it doesn't exist. And it doesn't exist because it was market driven. And so in that respect, the regulator is our big friend, right? When they come in, they have more stick and carrot that motivate our banks to do the pieces they need to do. The software, essentially, so we enable them to meet their compliance obligations, right? So that's the biggest win for us. That's our socket. On the other side, we got the plug, which is enabling other providers to consume that data and to trade it on us. That's where the regulators are less of a friend for us, right? Because we actually resell our license. We enable others to access that information and to do those payments. And so recently, one of the regulators was asking questions around how we do our I was like, we follow industry best practice, blah, blah, blah. Took them through the piece and they're like, could you give us more detail? And the further we went through this piece, we realized what they were actually asking for is, can you tell us your recipe? Because we want to do that too, right? And so realistically, the regulators don't always know what they need to do in those spaces. And so they lean on industry for those pieces. And so we're saying they're our biggest market opener, but they come with the risk of closing some aspects or making it more difficult to operate. And we have to balance that relationship between giving them all of the stuff they need to enable us to be in the downside, then limiting that so that we can actually operate and turn on and enable new services, because sometimes it can be overly regulated. If anybody saw the Australian ecosystem, you'll see that they restricted very heavily on who can use that data, to the point where if you received the data, you couldn't use it to create anything new. You could easily look at it, make a decision, and then you had to hide it. Because if you used it for anything, it became derived data, and derived data couldn't be used. Privacy laws applied. And so that restriction that's set there was strangling the ecosystem. So that feedback went into the New Zealand ecosystem, and the regulator heard the change here to say that it would be treated as privacy data, and you move forward. So it's two-sided.
I'm sure it's the same to you, Jovan, with you. Are they more your friends or your enemies, the regulator?
Yeah, it's a really interesting question. Very interesting dynamic here. We've spent a lot of time lobbying for change. Our vision is to build New Zealand's first digital challenger bank. We haven't seen a new bank here for, I don't know how many decades. And there's so many parts of the environment that have led to the quagmire that they're in. Effectively, we're stuck as businesses, as operators, as individuals, customers with 1980s bank tech. And obviously regulatory environment is a massive part of that. So we, at the start, you see, sometimes fintechs will sort of wait to be a beneficiary of it, or sometimes they will try and make change ahead of it. I think when we started off on this journey, probably nearly 5 years ago now, looking in the crystal ball and looking at what's happened globally and kind of forecasting how it would play out here in NZ. Its first few years were pretty slow, but I think in the last particularly the last 18, 24 months, it's just gathering more and more and more momentum. There's a lot of public pressure that kind of bubbles up into political sentiment. Yeah, so are they friend or foe? I would say on balance, friend, and they just can't really move fast enough. So we're pushing to anchor points like, in the UK, they had a competition grant where they fined the incumbent banks several £100 million, and then took £100 million, gave it to Starling, gave another 100 million to Metro, another 100 million to one other. And then you look at where they are a few years down the line, what that's done for the competitive landscape. If you're talking about banking, just fintech, it needs some really big levers like that. So ESAS accounts opening up is a big one for us. If we have anyone from any of the banks in the room, just so I know, I don't want to throw too many rocks. Anyone from yeah, so we do work really, play nicely with the big banks as well. And we're kind of 5 months away from having our own, let's say, bank parity infrastructure. So the opening up of ESAS accounts, not to get too into the weeds, but ESAS is the RBNZ overnight settlement accounts that all the big banks use. And up until now, you had to be a registered bank to access those, which means to be a registered bank, you start that conversation with $30 million of regulatory capital, and then the rest to actually build your business and get customers and all the rest. So the barriers to entry have just been massive, and they are steadily being chipped away at. So ESAS access is a big one. Traditionally as well, you couldn't become a member of Payments New Zealand. Payments New Zealand kind of writes the rules about access and governs access to all the rails. You couldn't be a Payments New Zealand member until you had your ESAS account, and you weren't allowed an ESAS account unless you're a Payments New Zealand member. So a proper chicken and egg situation there. That's now been unblocked. So we're in the process with both of those applications being submitted. Swift access, that's going to give us an international side. And then we can decouple from some of the bank relationships that are still, we do rely on a little bit, and have our own sort of bank parity infrastructure. And all of that is enabled by the regulations, like steadily being opened up as this public pressure comes. So yeah, on balance, they're actually doing a pretty good job, and they could do it.
I want to underscore the actual challenge that you have. There's, I think, 4 banks in New Zealand, and you're trying to build a 5th one. That hasn't happened since decades, right? So it's a massive challenge.
Yeah, essentially, the kind of classic joke about it is like the easiest way to become a bank in New Zealand is to already be a bank. So there are a few more banks, but you're talking like Bank of Baroda, or sort of the China International Construction Bank and things like this that they're not really they don't have a retail presence, for example. So yeah, 90+% of the market is owned by the big 4 Aussies. Without getting too much on the soapbox, it's been discussed, like the ComCom report into competition, the banking sector, the Finance and Expenditure Committee report into competition banking sector. All of the debates been had. Everyone knows what needs to happen to crack that open, because it's like $10 billion a year of excess net profits that are being sent offshore. And you think about what would that do if you were to enable that to stay in NZ.
You've talked to the regulator about recently about you talking about the tax fee, the transport, the balance that you've gotten through. What's your experience kind of engaging in New Zealand?
Yeah. Our story with respect to the cards is a bit shorter than the other two's experiences, noting that when we were starting, we kind of went for speed, and that meant that we partnered with a card issuing partner, which took on a lot of the responsibility around PCI DSS compliance and whatnot. And then we also were a little bit different in our contracting around how customers made deposits into our account and took ownership of those funds. So we didn't have to become a non-bank deposit taker, which then again allowed us to move a bit quicker. But, on the other side of that, now we're actually going through consideration just based on our COGS, whether we look to move the other way and make a bit more money on the transactions. We'll speak about it another time, no doubt. But going to the public transport thing specifically, that for us wasn't too hard. Like, there was some costs involved, and obviously you had to kind of wrap your hands around the legislation and how the tax system works. It is relatively unique for New Zealand. As I mentioned, there's one other way you can access your pre-tax income in New Zealand. But other than that, there's pretty limited salary sacrifice mechanisms, unlike, the markets of Australia where you've got novated leasing or some other things that you can access in other markets like the US with house savers accounts and flexible spending accounts. But in New Zealand, it was unique. We partnered with Deloitte, again, wrapped our heads around, CX-19C of the Income Tax Act, put forward how our product would work from a tax technical perspective, paid a bunch of cash and got some smart people in the room, and then we signed off on it, and we got our binding ruling, which is locked in stone until 2028. And what's kind of cool about it, and it gives our team the opportunity to pat ourselves on the back. It's practically a government issued monopoly because there is no other way to access this tool, I guess, or this module. But yeah, other than that, we've been relatively light on our relationship with the regulator. I do have one funny story, which I had mentioned earlier. So we got the FMA on board as a customer about 5 months ago, and one of my other sales guys was running the deal. And I remember him coming to one of our sales meetings and just feeling like absolutely psyched, that the regulator was going to come in as a customer. And I was like, you are not talking to them anymore. Give me that deal. Show me every email that you've sent to them. I want to know everything that you've said, like word for word. Because there was this little bit of me that was like, are these guys just coming straight through the front door to do an investigation? But yeah, lo and behold, they weren't. I'm not in jail, so we're good. But it was also a cool moment to kind of, go through their procurement process, which if anyone's done business with them was also relatively uncomfortable, full white glove experience, go out the other side and now they pay us. So here we are.
I mean, one thing that's really unique to New Zealand is that you have access to the regulator, right? Like if you can go and speak to them, you can get change done actually, which I think, me kind of from Europe, then Germany impossible, maybe UK, there is some room to do that. How do you think about that? Is New Zealand like a good place to build a fintech company? And have you thought about, I mean, again, I know the answer will be different for all of you. Have you thought about taking this global and what would that lead for this?
I think in the New Zealand context, like the MPs are not that far away. There's like 1 or 2 degrees of separation in most cases. So you can access to people and get a kind of quick allergic reaction or not. You can go and speak to the policy writers at Inland Revenue pretty quickly. One of the next things I'm actually pretty keen to put a members bill forward, and we've actually started the process with some light discussions, is to see whether we can get healthcare to be an FBT exempt expense in New Zealand, and just try and actually acknowledge that when you use behavioral economics as a method to drive change, people will go and do the right thing. And, in the context of healthcare, your salary sacrifice, $400 a year, what would that then lead to? You go and use that money in the health system on primary and preventative healthcare, which would then what would that lead to? You would end up with less secondary and tertiary healthcare needs, which then what would that lead to? Less cost in the public sector, which then what would that lead to? Less government cost. And then anyone that's kind of like, well, what happens to the tax thief? Then you can kind of have a conversation around, hey, bro, it still gets captured. It's just through GST and income tax at the business. So let's be slightly more sophisticated with our understanding of tax policy. So that's kind of my next big kind of idea around what we could do in the New Zealand context. And if anyone wants to jump on board with that, then watch this space and comment on my post when we start talking about it. Because I reckon, now that we've proven it with, case law in some respects with what could be achieved with public transport, the words always are on where effective tax policy can go to then drive subsequent changes, which will lead to better socially capitalistic outcomes in society. Yeah, but because they're not far away, you can go and shake their hand.
I think that's probably an underappreciated opportunity, because in most markets, the startup funders, particularly in fintech, work actively against the regulator. And here you can actually shift together and get heard. I mean, Dermot, it's also very important for you to talk to the regulator.
Yeah, actually, 3 months ago, I was on a panel with a person, and I was being fielded all the questions that were great. Everybody saw the side, and we're like, "Go, let's stick the mood in and see if you feel a little blight." And I did, and we had a great conversation. And when I got off, they came to me, and the question straight away was, we hadn't considered it that way. We hadn't seen it from that perspective. And some of those pieces were around pricing, some of them were around costs. New Zealand was talking about, and the government were, and currently are still, looking at putting in toll booths, as I described it, on the open banking ecosystem. So what they were saying is they want to do cost recovery. They want to do cost recovery on a system that's not even live, which I thought was pretty cheeky. It's a case of we're building the road. We're going to put a toll booth at the beginning. We're going to put a toll booth in the middle and one at the end. And it's a case of, great, well, we can't even get onto the road yet, and you're already looking to recoup costs. And so we had that conversation. We were able to sit down, and they came back and said, look, we're willing really to take this forward and bring that back, because we hadn't considered it that way. We hadn't considered the cost. She's saying that the banks could charge, right? It's like fantastic. They could charge $5 a month per customer. I said, fantastic. Do you know what that would cost compared to Australia? So the average cost would be $30.05 in New Zealand for what costs 5 cents in Australia. is that a reasonable price? And it's that moment when, as a regulator, they sit down and say, well, look, that's not the feedback you had from the bank, so it's great to be able to have that. I say, of course it is, that they are covering their own side, but there's another aspect of it. Having that access, it is unique in that way, and their openness to be able to do it is on both. The second part is when we got our first license, and we got essentially a bank grade license, an unrestricted accredited access in Australia. We did it with 1.5 people. And so we went in and we delivered the presentation saying, this is how we've executed, this is how we are SOC 2 compliant in 2001, even though there's only 1.5 people. And they said, essentially, bullshit. And we're like, it's fine. Look, this is my background. I can show you how it's good. And they went off and they got a PwC-style audit, and they did that piece, and they came back and said, yeah, they're good. Had that been anywhere else, we wouldn't even have that conversation. They wouldn't have even bothered. If that was back in Ireland, I wouldn't have been standing in the room having that conversation. They would have said, come back when there's 24 of you. Right? And to do that, we were able to then come compliant for 500,000 compared to starting the conversation at 2.5 million or 5 million to be, somebody saying, you could get 30 to come back. It's open, it's collaborative. And as I mentioned before, even the fact that INBI are asking us what our audit process is for the to come onto our platform so that they can align their process to accreditation in the same way means that there is a streamlining of that. You just don't get that elsewhere. So being able to sit down with somebody and say, actually, Mum, what are the things that you look for? Here's our run sheet. If you get, 8 out of the 10 ticks, you can give them this level of access. If you get 9, you give them this one. And anything beyond 10, give them a gold star and pat on the back. That kind of piece, you just unique.
It's a pretty good pitch for building fintech in New Zealand. Appreciate that. By the way, if anyone hasn't been yet this morning, I can scan this QR code and then Mark will see some questions that's really popping up on the screen. That we can also ask them. But Jovan, maybe for Emerge, it's SquareOne. So particularly, I think, if I remember correctly, in your case, it's really using it right. And you think there's so much room to innovate in the banking system that you're focusing on these 2 islands first.
To start with, yeah, we've got to win in NZ first before we head offshore, and yeah, it's kind of I think a lot of times the first thing that investors want to see on pitch deck is kind of, we'll prove the model in New Zealand, and then next week it's Australia, and the week after that, UK, USA. And here's our big tan. It's really exciting. And so we took a definitely a contrarian approach to that by looking at what the disruptable profit pools are here. If you just look at New Zealand and just look at the profit pools of the big 4, there's so much that you can do here. Definitely there's great points on both sides of that debate. But yeah, for us, there's so much white space to attack here still, and so much more in those areas. When I talked earlier about kind of going after those verticals, where we've absolutely outperformed what the big 4 banks can do. And even right at the start, with a team of 5 people, we were building some pretty amazing stuff, and we still are. But if you think back to with a team of 5, to your point as well, the first digital first issuer in Asia Pacific. And so that means the first issuer to take the physical, your personally identifiable information and the primary account number and the CVV, et cetera, off the physical card. And if you start to consider, does anyone here know why, if you look at a bank card, all of those details are embossed on there?
Right? So that to have to take a trumpet, the part.
Yeah, the old zip zap machine, that one. I don't know when the last time anyone saw one of those was, right? And so that gives you an insight into the room for innovation here. Stuff just has not been touched since that era. So yeah, we think there's a lot of room for us to grow here. There's a huge market to capture in this vertical that we're in. And if we could crack being New Zealand's first challenger bank,
Pretty big price.
yeah, it's actually the 10 year is certainly enough.
Yeah, I want to ask maybe about just how you guys got into the space, because I don't know if most kids grow up wanting to be a fintech entrepreneur. And maybe you want to be Elon Musk, want rockets or electric cars, but fintech is super complex, right? It touches upon banking and regulatory and tax. As Steven mentioned, 2 of you are building consumer products, so there's consumer angle to it. Yeah, it sounds like you guys have different experts in a lot of different things in order to build products and companies in the space. How did you get into this? And
I guess, do you feel like the fact that it's so difficult to get all that knowledge and become experts in that knowledge, is that part of your barrier?
Yes. So I can speak from personal experience. Yeah, I didn't actually want to be a fintech entrepreneurial founder as a kid. I wanted to be a firefighter. So I went off and did that. And I was a qualified, is qualified volunteer firefighter for a few years living down in Christchurch. And that gave me a really interesting lens on risk, I think. And how so? How to take a calculated risk, very like highly calculated risk. And look, all through my life, I've loved racing motorbikes. I've done some interesting rallies, and we talked about the Mongol Rally. There's been a weird thread for me about kind of doing things on hard mode. We took a Nissan Micra from London to Beijing. Every step of the way for me, it just seems to be about finding a really grunty challenge. I'm sure it's the same for everyone here in this room. Probably it's about finding the gruntiest challenge you can sort of throw yourself at. So I sort of fell into financial services when I got to London in my early 20s, and got drawn into that vortex, built my first business there and exited that in 2016. And so now with kind of 25 odd years in a richer services and pretty regulated ones as well, that experience is kind of starting to build up. And at the same time, like you say, you have to be pretty broad. You've got to be across so many different areas. Yeah, it's just the most ludicrous learning journey every day. And that's the bit that actually gets me out of bed every day. It's like the challenge is absolutely huge. It's never a one game. Can you build it back? Is still a question that we're asking ourselves.
I think mine is slightly different. So I'm from a tech background. I started my career in Intel, in their R&D sites. No tags, no labels, no job acknowledgement, just sitting in a site in a retail park, not able to talk about what you were doing. So in those days, I was working what was called next gen, which was 4G. So that kind of gives my age away. And so I was seeing the future of technology, but it was a very adversarial development environment. It's a US company. Basically, there's 3 other teams in the world doing the exact same job as you, and 2 of them are going to fail. So everybody who's in that group doesn't make it. And everybody who makes it gets to survive the next trial. So very adversary. And so I did that for a while. Then I went into business consulting, technology consulting, traveled around doing that. And then eventually came here, and I fell into a series of enterprise startups and enterprise. It actually came as advice from my advisor when I was in Ireland. I said I was coming to New Zealand, and they said, well, have I got a plan for you? And they listed a bunch of organizations, the types of roles to do, and I did them. Ending up in a startup which was supporting Barclays Bank going through their open banking experience, and there was 250 developers building the Barclays side. There was me on a stairs asleep in New Zealand trying to support, and I was like, the joke. No, it really isn't that hard. And so sitting on the stairs, having the conversation, and then saying, I'm too tired to climb back up, and I've got another call in another 30 minutes, so I'll just sleep here. And then waking up again, pressing the button and saying, no, you still didn't get it right, and going back to sleep. So I came up with it and said, this is the recipe for doing this in a repeated fashion, to doing open banking lots pieces. And it was just one of those pieces to say, it's the logical next step to do. If I told myself I'd be sitting here 8 years later, I might have stayed on the stairs, because it's bloody hard. It's been a big push to drive those changes, but as you say, it's the reason we did operate.
Yeah, so my story started when I was a kid, grew up in a low socioeconomic household. My folks, I broke my arm one time, and my folks didn't have the cash to drive us to the hospital where healthcare was free. They didn't have the money to pay for the after-hours medical bill at our local medical clinic across in Winfield. So I had to watch my mum negotiate with this practice manager to spread the cost of this payment out over a bunch of weeks. And I was like 8 years old, still thinking, like, it's pretty fucked that healthcare's not affordable. I should probably try and work out how to solve that problem. And then so as I finished high school, I went and studied health science, specialized in orthobiologics and regenerative medicine. We went and built a healthcare practice. We became one of the largest free under ACC providers in the country, 15 clients, 120 staff across 6 disciplines. And thought if I could control the money that paid the healthcare providers, I could make all of these healthcare providers that independently work for me. Story. And then built the first version of what we have today, which was called Health Now, which was a health and wellbeing allowance platform, which was put onto these controllable payment cards. then worked out that companies didn't really care as much about health and well-being as I did, but cared a lot about all of the other things that they distributed to their employee base, reward and recognition, multiple allowances for things that aren't healthcare, among many other things. And then kind of looked further afield and recognized that there was a global trend. And then so rebranded to Extraordinary. And then kind of through that process, spent a lot of time trying to learn around how the whole fintech thing worked, or just finance thing worked in general, because I spent a lot of time, I was saying to both of these guys earlier, spent a lot of time at the summit of Mount Stupid. If anyone knows the Dunning-Kruger effect, thinking that I knew a lot more than I knew. And then, went through the valley of despair. And then now I'm climbing back up on that slow ascent of actually now kind of knowing what I don't know. And then, so through that journey, watched a bunch of stuff that RJ Banger, who was the CEO and chairman of MasterCard, who also had a really interesting kind of background. And one of the things that he sort of spends a lot of time talking about is financial inclusion and the ability to participate in the finance system, and how, through fintech and card-based technologies, you can make these things more available. And then I kind of resonated with that and connected that to my story. And then, through what we're doing now, we've made a bunch of things that lots of employees either didn't have access to or weren't accessing because they were expected to pay and claim, more accessible. And I also really like the thing around being socially capitalistic, which I think by nature fintech businesses are, which is obviously, do things really well, make things available, and then by doing well yourself, you do really well for other people as well. But yeah, as the other two have already mentioned, it's really hard and you do lots of really dumb things. And, if it wasn't, in my case anyway, if it wasn't for a bunch of our shareholders and the support that we've had around the business, I don't know whether would have got to the point that we are now. A lot of really, really tough learnings and a few moments where it could have gone either way. But again, with the support of, whether it be through stories, kind of lived experiences, or, hey, you could probably make this one shift and you'd make a bunch more cash, which would reduce your burn significantly. But it's fun. And there's a big market out there. And because obviously being tech first, it's relatively scalable, acknowledging that players in different markets behave differently. Other than that, it's really, really interesting what you can achieve globally with fintech-based solutions.
Question again of the audience for Jovan about why did your first not a credit card with the regulatory process differences and challenges?
I mean, we started with SquareOne because it was a pain point that myself and Jamie, two co-founders, were experiencing ourselves. He's got 3 kids, I've got 2. They're all getting to that age. But essentially, think of primary school age, and you start to have those conversations with your kids around, how are you going to get some pocket money? Buddies nodding along, thanks, mate. How are we going to get you to do some jobs around the house? How are you going to save and actually buy things for yourself? All of those conversations start to come to the fore, and saying, you go, okay, we're going to go to the bank. I use the word cash. This is a bit of a ramble to kind of set the context. So I use the word cash, and my then eldest daughter, it was 8 at the time, said, "What's cash, Dad?" And I just went, holy shit, this is like bigger than big. This is like a once and ever, however many generations shift. Whether or not you think cash is kind of a good thing or a bad thing is a whole other debate, and arguably that's sailed, right? But I realized that the big light bulb moment for me was realizing that my 2 daughters have only ever seen mum or dad just tap a card to get what you want. And similar to you, mate, coming from a very low starting point in life, where for us, money was something you never talked about. You didn't have any, so it was pretty uncomfortable. And if you saw someone with money, then the assumption was, oh, they're probably a bad person. Because how did they get all that money? Realizing that it's a very Kiwi thing as well. We don't like to talk about money. It's a bit of a taboo topic still. It's not taught in schools. The government is not really going to help out. The banks aren't going to do anything. And you kind of end up with these just perpetuating generational cycles that go on forever and ever. Guess what? I'm going to say to my daughter as well, you're going to turn 17, 18, you're going to leave home, leave school, you're going to get a job. And then you'll learn about money, and you'll learn every lesson the hard way, and you'll run into every brick wall, because that's how it happened for me, and that's how it happened for my parents and their parents and their parents and their parents. And so it was wanting to kind of break all of those cycles. Why specifically? Yeah, prepaid. I mean, without getting too into the weeds and boring about it, but let's say prepaid debit was the most kind of commercially sensible and the most accessible for us at that moment of time. And similar to your story about, was it ISO accreditation with 1.5 people, two of us made the decision at the outset to go for a MasterCard principal issuing license rather than a sort of the lighter approach that you've taken. And there'd be like that debate internally is just going to be endless, like buy versus build, like heavy versus light. So I think we've taken kind of two divergent approaches when it comes to that. So yeah, we've always got for the like build primarily ourselves, to have a bit more control over our own destiny, but then it comes all of the risk and debt that you can't then outsource to a third party. So yeah, that's a little bit about the why. We've actually got prepaid, credit and debit bins available to us, and there's heaps more coming. When we looked at the product construct, and some of the early feedback from various quarters was, oh, you just want to sling credit cards to kids. What are you doing? Like, that's not going to go very well at all. People are going to hate it. And so it was never about that. It's not about, trapping people into debt cycles early or anything like that. SquareOne gives them all the tools they need to actually connect the dots, understand how to earn some money, spend some, save some, work towards goals, and have some self-determination and all those good things. So yeah, we've got all three of those bins available to us: prepaid, debit, credit, and commercial as well. So four. And yeah, we can deploy them in different ways depending on what worked best for the customer. That's where
Yeah, cool. I have another interesting kind of macro question. Music stops tomorrow, aka the global venture crisis happens again. What can you or your firm do to survive, support customers? How can fintech, regtech, sectors, and the rest of this industry?
So if the GFC happens tomorrow, how does extraordinary gonna have effect?
In a way, we've already survived that type of piece. Because we're regulatory driven, it means are regulatory mandated, but mandates can be paused. And so once upon a time, we had very clear dates on the Australian ecosystem for the rollout of open banking, specifically beyond banks, energy and lenders, and then the regulator looked away. They blinked and nothing happened. What we did was look at how we can enable the other participants to engage. And so that goes to how do you still add value within that space? And that's essentially what we did. We went through the lenders, enabling them to reduce costs. We went through loyalty programs, not that dissimilar to, Thronery races, but enabling them to be able to give better value to their customers. And so actually supporting businesses to reduce costs. That was where we were able to survive as such. So we went low, we went tight, and we started delivering value in all of the pieces we did. We cut every single service which wasn't at all, with the view of saying, how do we cut straight to margin for us and value for the customer, and how do we that doesn't compromise our SOC compliance with the ISO basis. We learned how to pull the belt in very tight and just survive. And I think that lesson has helped us. Starting, 1.5 people, we knew how to be lean, but being able to do that meant that we were able to become cash flow positive at a time when our competitors were. And so we survived the starvation, the desert, through doing value, which seemed like a crazy thing to say at the time because everybody was trying so hard to raise large capital and do those pieces.
I just realized that Steve doesn't remember the global prize.
Good mind joke. Yeah. It was a cold, crisp Friday morning and I was in year 9. No. I don't even know how I was. But yeah, as I was thinking through before, I was like, what are the risk factors for me there? I mean, we take all of the money that we deploy through to our card holders up front, so we don't really have too many risks on that front. I also kind of overlay that with the current macroeconomic climate and the state of employment in New Zealand, albeit, green shoots, let's be positive. But companies are looking at continually being relatively cost conscious, and hence our product tends to kind of operate around those unclassified or fringe benefits that employers have continued to use to attract, recruit and retain top talent. And then if you go and apply that to the public transport product specifically, then that product saves people on average $900+ per year at no cost to the employer. So I suspect we'd probably be fine on that front. Could we help change?
What are you doing? Helping employees and employers.
Yeah, I think broadly speaking, no, macroeconomic climates are cyclical, right? Everyone in this room would have lived through at least one, if not two, kind of those situations. And frankly, I'm kind of like looking forward to the next one, because I think, if you actually go on and apply that cyclical macroeconomic environment to what are the businesses that have gone and done amazingly great things, it tends to be out the other side of those situations. It's the businesses that are prepared and ready for those moments that kind of like, I've never been old enough to really benefit from one of those opportunities. So when the next one comes, I'll be ready.
Sounds great. Thank you so much. I think this is a great note to end on.
Sorry, can I ask one more question? Like, you guys touch money, right? And money can kind of tell you where things are going. And give you a sense of how are you doing what people are spending on? Are they cutting certain expenses? Are they splurging on something? What are you guys seeing? I don't know. What are you seeing right now in New Zealand? I'm saying people optimistic, it's the economy going in the right direction.
I've got an interesting anecdote to share about that, I guess. One of the things we do is, because of that starting point that I had and wanting to have a great commercial upside of building bank as well, I found in my previous business, right, it was that question I asked myself after I sold, was like, well, if the business had just disappeared, would anyone know any different? And ultimately we were just kind of sitting in a skyscraper, like moving numbers around the spreadsheets, and it was a bit soulless. That was part of the big appeal and part of the reason for launching the product like SquareOne and trying to do things like banking on customers' terms. It's about enabling access fundamentally. And so there's a bunch of cool stuff we're doing around that. One of them is the sponsored plans. And so for SquareOne customers that can't afford it, we actually give it to them for free. Yeah, I'd say anecdotally, and I'm not probably going to say anything that anyone doesn't already know here, like it's pretty tough out there. And we see the stories coming in of people that, hey, look, I can't afford this $4.99 a month subscription. And I'd like to apply for a sponsored plan, please. We don't actually, at the start, when I was thinking about doing this, I thought we should put some sort of gate in front of that, or we should be asking for what's your household income? What's your average education? How do we put a little bit of friction around that to stop it kind of going viral? That's the one thing you don't want going viral.
Not tell anyone.
Sorry?
Don't tell anyone.
Yeah. So look, we decided not to, we thought, let's just test this thing, like the sort of good old Kiwi honesty box. And so we leave one open text field where we don't prescribe that you have to tell us what's going on. We just, put like a comment box. But the stories that come through that, so heavy, like you're genuinely in a situation where that $4.99 a month, we can't afford it. So there's definitely, maybe everyone's not feeling it in this room and in these settings, but I think more broadly, it's pretty tight out there. And I wouldn't wish that on anyone. Wouldn't look forward to the next one myself, like having been through a couple. Raise a good point that does. And I experienced that with my first business in the UK. We launched that right in the absolute bowels of the GFC. And so, I think if someone had said to me, would you come and tarmac my driveway on the weekend for 50 quid, I would have done it. You do what you need to do to make the business survive through those tough years. And then when things turn around, like you get some real wind in the sails if you've learned to operate and start in that environment. So looking forward to things turning around.
Across our customer base, that's one of the interesting things that we've noticed. Like last month, we saw a transactional value of about like $1.8 million across like a bunch of New Zealand staff. They deployed like $2 million out to 9,000 odd people, and ASB deployed a bunch of cash out to 4,900 folks. So as I mentioned, about 1.8 million went through our platform. When you go and look at where the money is spent, you actually tend to see a bunch of money being spent at supermarkets and gas stations. And again, read into that what you will. I don't know why. Maybe it's because of the things that Jovan's just said. But where it kind of gets interesting, and where I go to is this money wasn't deployed for it to go to everyday expenditure. It was deployed by the business to reward someone. And hopefully, I think the business was intending on them going and spending it on something that's kind of out of the ordinary of the everyday spend to make them feel special. But we are definitely seeing a lot of the spend that's for long service, birthdays, like reward and recognition, allowances going to everyday household expenditure.
That's on a positive note to end on, but I'm trying to cut it short here. Thank you so much for trying to kind of give it up for the Fintech.
Thank you for tuning in to TechMates. If you enjoyed this episode, be sure to subscribe, leave a review, and share it with friends. We'll be back soon with more stories of Kiwi and Aussie founders reshaping the future and disrupting down under. Until next time, keep dreaming big and daring to disrupt.